Okay, I'm reading this from my phone right now from CNBC. Stock futures are a little changed following third straight day of gains for the S&P 500. Have we really had 3 straight days of gains? Is the recession over? Are the bulls ready to come back and roar? Here's your market update for July 7th, 2022. Let's go. Hello, everybody. It's Jeremy Whaley here from Trade Maestro. You can find out more over at trademaestro.com if you'd like to learn some more about trading and determining which direction trades are going and which trades you should take and what not. Today, in this video, we're going to be talking about a little market update for July 7th, 2022, and specifically addressing what I just read in the opening. 3 bullish days, 3 higher closes. Is it really happening? Is the recession over? Let's get over and take a look at what's going on in the market. You're looking at the Dow Jones Industrial Average, and I'm zooming way in so you can really see it here. Hopefully you can see that very clearly. And yeah, okay, 1, 2, wait a second. That was the close, lower close, slightly higher close. All right, let's look at the S&P really fast. Okay. The S&P actually had a slightly higher close yesterday, slightly higher close today. Okay. Wasn't exactly a fake headline, but what's really happening in the market? Let's zoom out a little bit. See, most people, actually, we'll stay zoom in for a minute here. Most people struggle to know what's happening in the market because they look way too close. They're looking at it through a lens like this, and they can't see perspective. Let's go back to the Dow. We're going to start there, and then we'll come back over the S&P. First thing you need to do is you always need to get perspective and see where you are, see where you've been. This is a little bit better perspective here. What you can see is we have not changed the trend one bit. Lower highs, lower lows. It's a bear trend, folks. So what do you call this? It's going higher, Jeremy. It's going higher. It's obviously the bulls are back. Well, let's talk about that a little bit. Charles Dow, in his Charles Dow theories, that's not what he called him, but that's what we call him. In Charles Dow theory, I think it's like tenet number 4 or 5. I forget which number it is. Says that volume must confirm the trend. So take a look here and notice. I'm going to wipe out these drawings here. I'm just kind of draw your attention to some stuff. Notice each of the bearish moves increasing volume, each of the bullish moves decreasing volume overall. Bearish move, increasing volume. Bullish move, decreasing volume. Bearish move, increasing volume. Bullish move, decreasing volume. What's happening here, folks? What's happening is we do not have the momentum to push to higher highs. We do not have what we need to actually reverse this trend. This trend's continuing bearish. I've been calling it since November. We've been doing these updates since November. No. Just because you have a higher close today than we had yesterday, it does not mean the trend has reversed. I'm still very bearish in the market. In fact, I'm more bearish this week than I was last week. Let's put some lines back on here. I know if you don't know what these lines are, it can be overwhelming. But actually, let me just do a couple things here and change this out so it looks a little cleaner. There we go. All right. If you don't know what these lines mean, it's okay. I just want to show you where we're going with this thing. I don't want this thing to take for too long here, but we are still below our moving averages. Averages are about to start separating again right in here. We have retraced right to the pivot area that Sunday night in my Profit Picks class we talked about. This is exactly where we drew the line. We said it's going to be right there. This is exactly where it's retraced to. It has not gone any beyond that. Our next move should be down most likely to 29,000. We've been calling this probably to 29,000. And then the question is, how fast do we break below there? Now, my next target is going to be 26,500. I've been calling this one too. So if you've been tracking these, it's nothing new to you. But those are my next 2 targets. I think when we get to 26,500, we'll probably bounce. We'll have to see. Your stochastic starting to make the turn, starting to turn back over to continue this trend to the downside. We're right at that 50% mark, right where we thought it was going to be. So no, I don't care what CNBC says. I don't care what Jim Cramer says. We're not done. We're not done, folks. Still got more to go. Now, here's the big question. The big question is, What's the speed with which we will get there? How fast will this velocity go? I do not have the answer. But I'm going to give you a couple of possibilities, and I know I'm resizing all over the place here. One possibility is to continue this trend that we've had and just kind of slowly work our way down. Okay, that is one possibility. That would take us a little later into the fall. The one I think is going to happen, whether it's 1 day or 2 days or 5 days, we will zig and zag here until we drop down, and then I think we're going to move pretty quickly to that 26,500 mark, okay? Regardless, that's the next step right there, number one. That's the next step. The question is just how fast we make the move. I think it's going to happen pretty quickly. And then when we get to that 26,500 range, we will bounce, as I've been saying, and then we will continue the trend, ultimately landing around 18,000 on the Dow. What's happened with the S&P 500? Let's take a look at it. Zooming in here on the S&P 500, same thing, same song, just slightly different verse. Same thing, basically. Hanging out right on my purple line. That's because I draw magical purple lines that contain the stock market, right? No. I just happen to know where to draw those magical purple lines. That's right. And so we are pivoting right on that turning point. I expect it to roll over very quickly here in the next 1 to 4, maybe 5 or 6 trading sessions, but probably good chance by the end of the week. Good chance it could be tomorrow. Very soon here in the next 1 to 4 trading sessions, I expect this one to roll over. Continue down. Next targets for the S&P 500. 35.25 and then 32.25. Those are round numbers, roughly speaking. And again, the question is speed. I think it's going to go to both those targets, but certainly the first one, I think it'll get there very quickly. Second target might take us on out to September. I think it will happen before then. And then the big one for the S&P, it's about 18,000 for the Dow. But the big one for the S&P, I'm calling for 2,200. That's a rough one, right? Well, I don't know. If you've been watching some of my videos, it makes a lot of sense. But I won't go into the analysis of it right now. Just kind of giving you a quick little update as we're midweek here during the 4th of July week. Didn't trade on Monday because of the 4th, of course. Here's the Nasdaq. Nasdaq, same thing. We're putting in the support here actually on the Nasdaq, and I do expect that will drop very soon. But if there were one of these indices that I could see bouncing a little bit more, it would be the Nasdaq. I wouldn't be surprised to see it push up here to around 12,000 before continuing on the bearish move. But no, there is nothing in me that is bullish. This is what Bob Prechter's referred to over all these years as the slope of hope. Some people call it buying the dip on the way down, but whatever you want to call it, there's a lot more bearishness to come. And that's what I'm looking at. That's what you guys are looking at. And we can just see it is all here. So what do you do about that? What do you do about all the bearishness to come? Well, if you're freaking out, then let me help you. Most of my students have been prepared for it because we've been talking about it since November. And all of them are pretty much prepared. They're either positioned in bearish trades or they have, at least gone to cash or something. But if you're needing some answers, you need to know what to do next. I have got a brand new video series called Rescue My Retirement or Rescue Your Retirement. I forgot now what I called it, but I'll put a link here below the video. You can click on that and you can get signed up for that. It's absolutely free. Going to send that to you. And it just gives you 3 quick steps of what you can do to protect yourself during a bear market. And then if you need to go to the next level so that you can actually learn how to get in and get out a little bit better and position yourself better, look, folks, there's no reason to be afraid. We knew it was coming. If you're down 20%, if you're down 30%, okay, it stinks. But how do you protect yourself against the next 20%, the next 30%? That's where you are right now. Those are the decisions you have to make. So get yourself signed up for that if you want to. Put the link down here below. And if you've not subscribed to the channel, then you need to do that. You need to get yourself subscribed right here. Like it. If you dislike it, then we'll hunt you down, and that's all right. You can dislike it too. I don't care. But, if you like this stuff, if you like the updates, I'm trying to do 2 a week here. I'm not always getting them out for you, but trying to do 2 a week, trying to put out a lot of information to help you in the bear market. So get yourself subscribed. And if you want, go over to trademaestro.com, get yourself on my mailing list so that we can send you an email and let you know when each of these videos goes out, and you can go and watch it as soon as it's available. All right. Thanks again for subscribing. Thanks again for watching. And until next time, happy trading to all of you. We'll talk to you soon.